Okay, in this lesson, we're going to talk about how to take profits when you're in a profitable Forex trade and how to maximize taking profits by scaling out lots. And this lesson is from forexearlywarning.com, and it's part of our 35 Forex lessons. This is lesson 30. If you click right there, you'll go to lesson 30, and it's part of our 35 Forex lessons. So in this lesson, we're going to discuss how to take profits by scaling out lots in any profitable trade. And remember that setting stops and moving stops is part of the overall money market picture. Some Forex traders think that managing the exit is every bit as important as managing the entry. And if you're profitable, I can pretty much agree with that. So let's open up the discussion now and talk about taking profits. First of all, is it possible to make a profit on your Forex trades? Well, we certainly believe it is. We have a great trading system at Forex Early Warning. We invite you to check it out. You can practice trade with our system, and I think you'll like it quite a bit. And we have a fantastic set of tools, trend indicators, entry management techniques, and in this particular lesson, we'll be talking specifically about profit taking. So check out our system. You'll like our system. Our system is profitable, and you'll be happy with the profits. But the question is, what do you do with the profits once you get them? Well, one thing we want to do is talk about our basic rule of thumb for profit taking. For any profitable trade you get into, we have a basic set of rules for getting out of the trade profitably. So if you're in any trade, and if you go into positive pips by 30 to 50 pips, you can start to use the techniques that are in this lesson. So basically, the first rule is that if you get to plus 30 or 50 pips positive on a trade, you would scale out half of your lots and adjust your stop order on the remaining lots to break even. So let's look at several examples here. In the first example, let's say you sell an even number of lots, like 2, 4, 6, 8, or 10 lots. So if you sell, let's say for example you sell 2 lots, it could be 2, 4, 6, 8, or 10 lots, some even amount. When you're up 30 to 50 pips on the sell, you would scale out half your lots. So if you sold 4 lots here, you'd be scaling out 2. Then you set your stop at break even, and then you let it run, and then you start examining the market to see how far you think it'll run. We have a similar system for multiples of 3 lots. In other words, if you're buying or selling 3 lots, 6 lots, 9, 12, etc., or any multiple of 3. So you sell 3 lots of the same pair. You're now up 30 to 50 pips here. You scale out 1/3 of your lots. If you get up 60 to 70 pips, you scale out another lot, another 1/3 of your lot. So if you sell 3 lots, you scale out 1 here, scale out 2 here, plus 60 to 70 lots, and you still have 1 lot running, and you can move your stop to break even. Okay, so in all cases, all you're doing is reducing your position size and scaling out lots. And then you keep evaluating the market to see where the market goes. You reevaluate the trends, and then you decide if you want to hold on to that last lot or if you think this might be an exit point. So there's a lot of benefits to taking profits and scaling out lots. Your account balance goes up, your equity goes up, your available margin goes up. It builds confidence. It's fantastic. You can do it with a practice trade account, a demo trade account. You can do it with micro lots. You can do it with mini lots. You can do it with anything you want to try to get up to full-scale trading. So it's easy to practice taking these techniques depending on how many lots you're running. So now there's other considerations when you're taking profits. If a pair is volatile, instead of scaling out lots at 30 to 50 pips, you might want to scale out lots, your first lot at 50 to 70 pips, something like that. Because the 28 pairs, we trade 28 pairs at Forex Early Warning, and not all of them have the same level of volatility. Another consideration is the strength and quality of the trend. If you have a currency pair that's trending on the higher time frames and you scale out 1 lot, Well, they could likely consolidate here and then continue much, much lower, so you're now riding one more lot into deeper profitability. You'd have to look at to see if the pair is trending. If the pair is ranging, or let's say the pair is trending on H4 time frame and the H4 time frame stalls and closes, then you might want to scale out your final lot. You know, the last lot that you're holding here, you may want to scale that out if the H4 time frame closes up and you think that pair is done moving. If you buy a pair like the Euro Yen, for example, and all of the yen pairs are trending up on the D1 time frame, then you may want to hold on to that trade because the yen is weak and it's probably going to keep moving higher. So you have to look at the time frames to make decisions whether or not you want to hold that last lot or just close it out completely. From our example here, you're still holding on to some lots here. You've scaled out some lots, but you're still holding on, and you're trying to decide if you want to continue to hold those lots. One more consideration is when taking profits is the entry signals. This is an example on the Forex heat map right here. These are strong signals. Let's say you bought the pound yen. Well, the pound yen is moving up 1%. That could be about 150 pips. You may want to wait until you get up closer to 100 pips before scaling out your first lot. It depends on the volatility of the pair. Other pairs are not quite as volatile. Like we have 28 pairs that we trade, but some of them have varying degrees of volatility, and we have a lot more information about how to judge the volatility in our 35 lessons. So if you're trading a volatile pair and you have a strong signal, I mean, pairs like the pound yen can move up 300 pips in one trading session. And so using the rule of thumb still applies, but you're not scaling out lots at 30 to 50 pips here. You're probably scaling out lots here at 100 pips and then rechecking the trends later. So the volatility of the pair is a strong consideration. Another thing that Forex traders do is they complain a lot about getting stopped out, but that's because they're moving their stops down or using trailing stops. In this case, what we're doing is we're advising you to leave your stop up here at break even and just manage the back end of the trade and the profitability of the trade while leaving your stop away from the market. So do you want to use do you want to move your stop down, or do you want to use a trailing stop? Our answer is no. You would just look at the trade, use the rule of thumb, and start managing lots and scaling out lots rather than recommending trailing stops, which most beginner traders, they always put them too close anyway. So I think that all of our techniques that we teach for money management, for profit management, you can read about them here, and I think what you have to do is you have to practice trade. If you demo trade a 3-lot sell and you start scaling out lots one at a time, as you get into deeper profitability, it'll build your profit taking skills, and then when you start moving up to micro lots or regular lots, you'll start to know how to handle the profits. As it goes deeper into profitability, you just continue to scale out lots while leaving your stop at break even. So you can also use your mobile devices to manage profit. Once you're in a profitable trade, scaling out lots on a mobile device is very easy. You might be in a trade for several days, but you might be mobile and you might have to use these exit techniques as you go deeper into profitability with a mobile device. And it's pretty easy to manage a trade that you're already in with a mobile device if your stop is set to break even and all you're trying to do is take profits. You can also do some level of automation on your exits. One thing you can do is you can set price alerts. So if you have an important resistance level or support level that a pair is getting close to, you can set a price alert just above that resistance level, or just below that resistance level, or just above that support level, a critical support level for profit taking. And you can have that price alert delivered to your phone. You can have that price alert delivered to your desktop, and that price alert delivered to any mobile device. And then when that price alert hits, then that should be your signal to go scale out more lots, which will only take you about a minute. Scaling out lots only takes about 30 seconds to a minute. Also, if you want to comply with the first in, first out regulations, you can basically just open up 2 separate positions on the same pair, and then you can set a limit order on the first position. So that way you're scaling out half your position that's split up into 2 pieces, and then you're using a full limit order on one of the positions to scale out lots. So you would actually open up 2 separate positions and then set a limit order on one of those 2 positions, and one of those 2 positions can be more than 1 lot. So as you start to get really good trading, and if you're using these techniques, if you sell a particular pair and you sell 3, 4, 5 lots, and this pair is trending down on the higher time frames like the W1 time frame or the MN time frame, you're going to scale out some lots here and here, and then you'll still have 1 lot running. And then if this pair continues lower because it's trending on the higher time frames like the W1 time frame or the MN time frame, it's really got a strong long-term trend going, there might be a point a week from now where you're looking at a trade that has, on that remaining lot, you're going to have hundreds of pips of profit. And it's going to be difficult, because you're going to be watching it bounce up and down. But as long as you keep your stop at break even and away from the market, you can start following the longer trends and time frames, and you might get your first 500 pip trade just by trading when the market is trending on the higher time frames, and you scale out lots but you leave 1 lot running using these techniques. You can have a longer term position that's profitable with a break-even stops, that's trending on the highest time frames, up or down, and you can have hundreds of pips of profit on that remaining lot. So this particular lesson is lesson 30, and we're trying to give you all the ideas that we know about scaling out lots, maximizing your profits, while taking into consideration the strength of the entry signals and also the condition of the market, whether it's trending or ranging, and also the characteristics of the currency pairs that you're trading. So this is lesson 30 in our 35 lesson package from forexearlywarning.com.